Okay, option traders, you know what it's time for. It's another video about how to read the stock charts. I've been saying this in almost every video I make. If you are an options trader, especially a beginning options trader, you have to know what the stock looks like on the chart. You have to know which direction it's going in. Up or down, sideways, doesn't matter. You cannot trade options unless you know what the stock looks like on the stock chart, because otherwise you're just trading blindly. You're just buying or selling options without even knowing what the stock is doing. Yes, you may know what the company is and what they do and what products they make, but if you don't know how the stock is trending on the charts, how do you know whether you should be buying calls or selling puts or doing spreads, or what your idea is of where that stock may or may not go in the future? Those decisions are very important in options trading. When you trade options, you have to have an idea of where the stock's going to be at a certain point in time, the expiration date, because if you're not successful by doing that, all your trades are going to fail. So one of the best ways to help your options trading game is to look at a stock chart, technical analysis, to see what the stock's doing. And that's what I do in these free videos. Try to help out the trading community. We all want to be better traders. So in this video, if you're new here, what I do is I look at the charts. I show you my setup. I show you the indicators that I use, the moving averages, all that good stuff. And we try to figure out what stock is moving in what direction so we can get our options trade ready. Okay, you got to put in the work, you got to do the research, you got to flip through the charts. It takes work, and that's how you become successful. All right, so let's just jump right in and start looking at some charts. Okay, everyone, Lowell here from smartoptionseller.com. This is what we do. We're big put sellers, and put selling is a bullishly oriented strategy. So we're always looking for more bullishly trending stocks that could help us get into trades and make profits. That's the ultimate goal. So what we do here is we always look at the charts and we flip through them and see what's good, and we get ready for next week's trading. You got to put in the work. So we always want to start with how the overall market is doing as a whole. And the best way to look at that is through looking at the S&P 500. And we use the SPY. Okay, this is the stock symbol, the SPY, which is the exchange traded fund for the S&P 500. It gives you the best overall view of the market as a whole. And you know, the indexes, we've got the SPY, we got the triple Qs, and we'll look at that as well, and the diamonds, which is the Dow Jones. Those three are the main indexes in the stock market. And whichever way those go, most individual stocks will follow along as well in sympathy, because most individual stocks don't have a lot of news on a day-to-day basis about the company, so they just kind of follow along with the market. When companies have their earnings every 3 months, those are big, major moving events for that individual company. But otherwise, they'll tend to move along with whatever way the general market is moving. So let's look at the SPY and see what's been happening. And for those of you that are new here again, up in this section here, this is the price action of the stock. Okay, you can see which way the general stock market's been moving, has been upward. Down here is one of the indicators I use. So let me go over what we have here. We have 3 moving averages. We got a 20-day blue line, we got a 50-day red line, and this orange or green line is the 200-day moving average. I use 3 of those. Those are the only 3 moving averages I use. And the moving averages help you see visually which way a stock has been moving. Now you can see, obviously in this case, all 3 moving averages are sloping upwards. Okay, the slope of the moving averages is very important because it tells you which way a stock is trending. The trend is your friend in the stock market. Stocks will stay in a certain trend for however long they can until it moves in another direction. And the moving averages can tell you on a short-term and a long-term basis how they've been trending over time. Down here is the RSI that I use. It's an overbought, oversold indicator, 14-day look-back period. This is what the 14 means over here, RSI. And it oscillates between overbought and oversold levels based on the price action up here. This is a daily chart. This is a daily bar chart of the price action. It's going back about 2 years in time. And on the RSI, my overbought level is 80 and the oversold level is 20. So when it oscillates to one of those extremes, either 80 or 20, it just tells you that the price action up here is potentially in the danger zone of turning at that point in the other direction. So I use that gauge to help me figure out, if a stock is getting overheated or too oversold. So let's look at the general market. This is what we like to do. Obviously, you can see over the last 2 years, the stock market's just been going up, up, up. It has a nice upwards movement. But where are we? Where are we right now? Okay, we're flirting with all-time new highs in the stock market just last week. So this was, what day was this? This is October 17th, this bar right here. That's the last time the S&P 500 hit all-time new highs and pulled back to the 20-day moving average, the blue line right here. So what I want to tell you is that when stocks are in a pretty strong uptrend, they will, or downtrend, they will typically bounce off the 20-day or the 50-day moving average. That tells you those two moving averages are more of a shorter term basis, 20-day and 50-day, but a strongly trending stock will continue to rally up and bounce when it has a pullback off of one of those levels, either the 20-day or 50-day. You can see over the last month or so, every time it's pulled back, it's bounced right off the 20-day moving average. Sometimes it'll pull back to the 50-day. Sometimes it'll pull back even further. Okay. This was in early August. This is the last time we all were panicking that this is, this is the big one. The market's over. We had a pretty steep move down, but yet it just bounced right back. The one thing I can tell you is the stock market will always go up over time. Always go up over time. Yes, we have pullbacks. There's no doubt about that. But those are some of the best times to step in and buy if you're willing to step in and buy. Now, here's the monthly chart of the SPY. It goes back to 1993. Obviously, over time, the market goes up. That's what the market is supposed to do because it's made up of products, of companies that create products that people keep buying. If they keep making these products better, they're going to make more revenue. And the more profits a company makes, there's only one way for the stock price to go up, and that's up. All right. So that's how the general stock market works. So where are we here? So let's go back to the jelly chart. The last 3 months of the year seasonally are very bullish times for the market. So I'm a bull. If you've been watching these videos for a while, you know I'm always talking about bullish movement, optimist, all that. Because in the long run, I'm invested for the long run. The market's just going to keep going up. But you'll have these bounces off the 20-day and or 50-day. If you get down to the 200-day moving average, which is very rare, that is usually a really good time to buy. When it's happening, I know it's very scary to step in and buy when you think everything's falling apart. But if you look back at the history of the general stock market, a bounce off the 200-day moving average is a pretty good time to buy. So where are we right now? Well, the market was, in an uptrend, and it had this little pullback just last week to the 20-day moving average. And then on Friday, which was October 25th, right here, this was this bar right here. You can see it's had bounced off the 20-day moving average and starting to move higher again. So I'm a bull into the end of the year and beyond, but on a shorter term basis, the last 3 months of the year are typically bullish. There's really, to me, nothing that's going to derail this movement upwards. I think we're just going to keep going upwards. We have the U.S. election happening very soon, but all the studies show it does not matter who is in the presidency, whether it's a Democrat or Republican. The market doesn't care. The market usually does well. Doesn't matter who's in office at the time. The market is different. The market is separate. The market is apolitical. They don't care who's in office majority of the time. The market will go up no matter who's there. So the election may have a jolt, a knee-jerk reaction depending on who wins, but in the end, like I said, the market is made up of companies. They're going to keep making products. Doesn't really matter who's in office. So I'm a long-term bull. So anyway, the stock market just seems like it wants to keep going up. The way to make your option trades better is that if you're a bull and the market's been running, what you want to do is wait for a pullback, either to the 20-day or 50-day, and then you step in. You dip your toes in and then you start buying. For us here at the Smart Option Seller, as I said, we are put sellers. We sell put options. We sell naked put options and we sell put option credit spreads, which are bullishly oriented strategies. So we look for stocks and indexes that are in an uptrend, pulling back to a certain level, either the 20-day or 50-day, And then we wait for the bounce. We wait to see if the bounce is going to happen, and then we get on board once that bounce starts to go. That's the best way to use your timing. It's a high probability timing pattern. Market's in an uptrend, wait for a pullback, and then you get in. That is a higher probability setup on a bullish trade. Will it work all the time? Absolutely not. There's no guarantees in trading. There's no guarantees in this method, but it's higher probability. You want to make sure you check the charts. If you're bullish on a stock, don't just go in without looking at the charts. Look to see where it's going. Is it on a pullback yet, or is it still moving higher, higher, higher? Wait for a pullback. Don't be impatient, okay? We're all impatient, but higher probability, wait for a pullback to one of the moving averages. Let's look at the NASDAQ, represented by the triple Qs, QQQ. Here's the symbol. If it's not written on the chart, here's the symbol up here in the left-hand corner. This is the NASDAQ, also up, 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 just like the S&P 500. We draw these lines here, okay? These blue lines here are hand-drawn by me just so we can see areas of resistance or areas of support. This line right here, this blue line was drawn, and you want to draw it along the uptrend. It just gives you an idea of which way the stock is trending. Okay, so the market was moving higher, 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 and it had the support area. So on a future pullback, it will probably bounce off the line. If you just can envision the line being extended, you'll probably see an area where the market bounces off. And if it falls through, then you have, the moving averages acting as support below it. Okay, so these patterns work over time. Here was a resistance area right here before where the market was having trouble getting through, and then eventually, finally, it blasts through. So if we go back to the SPY real quick, you can see these blue lines. These are channels that I've drawn, okay, to give you a visual of which way the market's trending. And then it has a little trend the other way, and then it keeps moving on in a different direction. So you want to have an idea of which way the stock is trending, or the individual stock or index, just to help you with your timing plays when it's time to make an option trade. So we saw the triple Qs. Let's look at the diamonds, which is the exchange traded fund for the Dow Jones Industrial. We had this sideways channel for a bit. Then what we have here is this ascending triangle. You can see the up line here and then the flat top. That means the market's going up, but it's having trouble getting through a resistance area until it finally blasts through. Now, here we had all-time new highs just recently. It's on the pullback. So if you're bullish on the Dow Jones, this could be an area where we step in lightly, because it's pulled back to the 20-day. It's probably going to, bounce off the 50-day soon. But you want to, if you want to front run it a little bit, which means you're getting ahead of the potential bounce, which may or may not work, you can do that, or you wait until you see it connecting with the 50-day moving average here, and then the price action starts to bounce. So that's an even higher probability timing pattern. You wait for the bounce, then the market is ready to keep going higher. Okay, people like to try to front run these things. They like to try to guess. They like to try to pick bottoms. Sometimes it works, sometimes it doesn't. I'm more of waiting for the confirmation. You may not buy at the low, but at least you have the confirmation that it's bounced, and everyone will start piling on and moving it higher in that direction. Okay, so those are the indexes. Things look good. Seasonally, bullish period time of the year. We're bullish, so we're looking for bullish plays here into the end of the year. Let's start looking at some individual stocks on our list. These are just some stocks that I look at over and over again. We've got Microsoft. Here's a pattern. This is what's called a congestion pattern. You draw these, okay? You connect the lines, some of the tops of the move, and so you can see the price action gets tighter and tighter and smaller until it's forced to blast off in one direction or another out once it gets into the apex of the triangle. It looks to me like Microsoft is starting to make a move higher out of the congestion pattern. So if I was betting on Microsoft, my bet would be more to the upside. That's how these patterns work. And I'm going to show you a quick and easy website you can go to if you want. If you're real new to technical analysis, you can read up on it. These are some free websites. Intel's just been a dog. It's hanging down by the lows. So let's take a quick look at Nike. So Nike's been, not such a great chart. I mean, it's been going down for a while. We looked at the pattern here. It looked like it was starting to go up, had that same ascending triangle. You got the price action moving up, had some resistance here, but now you can see it's dropped off. Now we have a position in Nike as well. We'll have to reassess here, see if this is going to continue down or if it's going to catch a bid and start to move up again. So, sometimes you take positions, and as I said, not everything's going to work out. So we have to keep a look on that. Nike still not sure if it's ready to make a turn higher for the long run yet. So that's assessment on Nike. Oracle. Oracle had the great earnings here. It gapped higher, and then it continued to move higher. And now you can see it's connected with the 20-day moving average. The 20-day moving average had to catch up. It had the blast off here, kept moving higher. So the moving average started moving up, started a little sideways price action, and finally got the connection right here. So this could be the launching spot for the next leg higher. Okay, you had a big move, so it has to digest that move, has to wait for the moving averages to catch up to it a little bit, catch up to the price action. So right here, I mean, if you want to be bullish on Oracle, even though it's at all-time new highs, doesn't mean it can't make more all-time new highs. This is just more of your high probability timing pattern, that if you want to get bullish on Oracle, here's the spot to do it, because it's letting the market catch up to the big move it's made. Everyone reassesses and say, okay, it's connected with the 20-day moving average. Now we can go in and start to buy it up again. So those are some of the things that we look for. AMD has been a little frustrating. I've been a fan of AMD. Keep moving myself over here. It's just kind of sideways, kind of ugly, kind of moving back and forth above and below the moving average. So it's kind of jumbled up here. I can't really have a strong opinion whether it's really strongly bullish, really strongly bearish. It just keeps meandering here. So, sideways action is not a bad thing if you're a seller of options. Would rather have it trending in, a higher direction. But sideways action is not that bad. But, I can't really get a sense of what's happening here. So if you don't know what's going on, stay out of the trade. So we have nothing on AMD right now. Apple, we have that same ascending triangle pattern. Price action's moving up, but it's having trouble getting through this area here. You can see it's getting close to the apex of the triangle. What we're just waiting for is, and if the general market could get going upwards as well, Apple should finally blast through this 235-ish level and then continue higher. So it's storing up this energy. It's trying to get through. The more times it gets through, it's eventually going to be successful and then blast higher for the next move higher. So you want to look at these price action moves. You want to draw the patterns and then wait until the explosion happens. My guess is that pretty soon, in the next week or so, Apple should make that move higher. They actually have earnings coming up. I think it's next week, actually. Apple has earnings. So that could be the catalyst to send it higher. On the other hand, if Apple's earnings are not good, it's going to crap out and drop to the downside. So we never like to have a position over earnings announcements. So we're going to wait and see what happens. I think it's Thursday. Is it on Halloween this week? So anyway, keep an eye on Apple. It's either going to blow up or it's going to drop down. I know that, that could be the case for anything. But if the earnings weren't around, this pattern would probably come to fruition and Apple will blast higher. So keep an eye on Apple this week. There's actually a lot of earnings coming out. Some of the big tech companies are having their earnings coming up very soon. So we keep an eye out on that. Let's look at Amazon. I believe Amazon has their earnings coming up soon. So some of these stocks are kind of treading water until the earnings comes out. Same thing. This kind of looks like AMD. It's kind of all over the place, kind of moving back and forth between the moving averages. So Amazon just kind of treading water right now. Nothing there. Netflix, they had their earnings recently. We've had positions in Netflix, bullish positions. This is an uptrending channel, and we had the ascending triangle here. You can see sort of another ascending triangle here. So Netflix is definitely keeping up with the trend that it's been in. Had the earnings, you can see this gap right here. This is where it closed, and then the next day it's trading up here. So that had good earnings, and Netflix seems to keep going up. I would stay along with that position. There's no reason to get bearish on Netflix just because it's making new highs. A lot of people think, I'm going to short this thing, I'm going to sell this thing because it can't go any higher. Of course it can go higher. All stocks can go higher. Trying to pick a top is a really risky thing because you can have unlimited risk to the upside if you're trying to short these strong stocks. So Netflix looks pretty good there. Cisco, strong, looks pretty good, Cisco. Let's look at Walmart. Walmart just keeps chugging along, look at it. It hugs along the 20-day moving average. Walmart's just one of those companies that just over time really does well for you. So Walmart looks good. Disney, on the other hand, let's see what Disney's doing. Was in the downtrending channel, but started to move up. So now it's in an uptrending channel. So you can see how it's been hugging along the 20-day moving average. The bottom line, what I'm trying to teach you here is that watch the price action, draw the trend lines, get an idea of which way the stock is moving before jumping into an options trade. It will certainly help your profitability as an options trader. Tesla, they had their earnings. So that's where it was, and then it popped higher. So Tesla, still kind of a jumbled mess. Will it find resistance here? We can draw the line. Let's draw a line here. So we've got resistance up here around 270 or so. Will Tesla break through? That's the next major hurdle for Tesla. And will it continue on to make probably more all-time new highs for that stock? Let's see, what else is good? Merck is something I wanted to show you because this was a stock in a downtrend. And I said, a lot of people want to try to pick a bottom, try to figure out, they want to be the hero and get a stock when it's on its lows. But this is a stock in a downtrend. This is the descending pattern, the descending triangle. You got the price action moving down, and then you had an area here where what couldn't get through, but it finally blasted through. And you can see here, this bar, look at that, more new lows, more new recent lows. So the next potential spot where it may find some support, you got to look back on the chart, is back here, October, November of last year. So 1 year ago, this could be at the 100 level, could be the next area where Merck may get some support. Maybe it'll bounce, maybe not, but it's in a downtrend. Why try to get long? Why try to be bullish? Why try to pick bottoms in a stock that's telling you it's going down? Don't do that. Don't try to get long here until you see a confirmed uptrend. It's just going to help you in the long run. Okay, so use the charts. Verizon, I like the company. It was in a nice uptrend, and then now it's pulled back to the 200-day moving average. So I'm going to be looking at Verizon pretty strongly here to see if there's any bullish potential trades. Yes, it's still pulling back, but it has the 200-day moving average, which can typically be the last line of support. See, it bounced off of here the last time. So I'm going to keep an eye on Verizon for potential new bullish plays in the near future. Costco, let's look at Costco. We also have a position on Costco. We sold put option credit spreads, which is a bullish strategy. So we had the ascending triangle here, but as you can see, it has not blasted higher yet. Kind of fell off, but it's hovering around both the 20-day and 50-day moving averages. My guess is that it's going to bounce and keep going higher. That's the hope. But I use the charts to help me gauge what option positions to take. I'm just not blindly trading options without consulting the charts. So that's what we do. McDonald's is in a nice uptrend, got hit here. So is it going to create a new pattern, a new bearish movement right now? Yet to see. It's right on the 50-day moving average, so it may catch a bid. This is a point where you have to keep an eye on it. There's no trades yet on McDonald's. We're keeping an eye on that. Pepsi, just sideways action, nothing going on there. Here's Warren Buffett's company, the Berkshire Hathaway Fund. We love Warren Buffett. If you're going to piggyback one person, you might as well piggyback him. You can buy the Berkshire Hathaway Fund. let's go to our website real quick. I want to show you what we have to offer you. smartoptionseller.com. This is what we have. We're all about put song. If you want a free ebook about put song, what it's all about, why we love it, go click on our free ebook here. You can get the free guide. Put in your name and email address down at the bottom. We'll send you an email with a link for the ebook. Learn about it. Also, if you want a little deeper dive into what put selling is all about, a longer, deeper dive, we have our video series here. You can click on that. It's a 5-part video series. Here's our services tab. We have our 2 newsletters that we run, put selling credit spreads. We have our coaching sessions. If you need a little help getting to that next level, we can help you with that. But I want to talk to you about the Warren Buffett thing. If you click on the shop thing here, it'll bring you up to a link. Here's an ebook that I wrote, The Secret to Buying Warren Buffett for Pennies on the Dollar. Uses a certain options trading strategy to take advantage of bullish activity in a stock. So here's Warren Buffett, looking great. He's done better than the S&P 500 over decades. You might as well piggyback somebody who knows what they're doing. Looking good for Warren Buffett. Meta, the old Facebook, was in the sideways channel, broke out of it, kind of pulling back a little bit. We have nothing on Meta. IBM, Big Blue, let's take a quick look at this. Nice strong uptrend. I believe this was an earnings, so it had, people were not happy with their earnings. Now is hovering right on the 50-day moving average. Is this the spot where it bounces, or will it keep dropping? Yet to be seen. Once again, I say wait for the confirmation of the bounce before jumping in. You can dip your toes a little bit, buy a share or two here. I mean, it's expensive stock, so you don't want to go all in, because this may not bounce. It may continue to drop, or it may bounce right here. So a lot of this is wait and see. You got to wait and watch to see what happens after a big move like this. So we're keeping an eye on IBM, Google, sideways as well. They probably have earnings coming up very soon. Let's see what else we have. Now let's talk about Colgate, because this is a stock we looked at. I wanted to show you how this had a great uptrend. Okay, it was bouncing off the 20-day and 50-day moving averages, bouncing off the bottom edge of the channel. But something happened up here right at the beginning of September that caused it to be pushed into a downtrend. Now, we drew this little channel right here very recently because it looked like maybe the stock was starting to go up a little, maybe getting ready to form a new uptrend. That has failed, and now it's stopped and has started to move back down again. So here you have the 200-day moving average potentially ready to catch it for support. So this is a wait and see type of stock. It had been in this uptrend for so long, but you can see how fast it could give the price action back. The saying is the market takes the stairs up and then the elevator down. The elevator just knocks it back down really fast. So it just gave up all these gains in just a matter of about a month. Okay, so keep an eye on Colgate. We want to see if that's going to catch a bid at the 200-day moving average. What else is impressive here? Coca-Cola is having a little bit of a pullback. You can't go wrong with Coca-Cola. If you want to have a strong, steady stock with great dividends, this could be an opportunity to buy in the pullback. It's getting close to $74, and now it's down to about $67. So is that a good $7 pullback? That's a pretty big move for a company like Coca-Cola. So keep an eye. Will it keep dropping towards the 200-day moving average? Yet to be seen. But this could be a nice gift for those of you who want to potentially get long shares of Coca-Cola. Anything else? Johnson & Johnson, not much. GlaxoSmithKline starting to drop here. So you can draw the line. Okay, so let's draw the downtrend, and then we've got the support here. So this is the descending triangle. Could pop through and continue to go down, look back. So the $34 area is that next area of support. You can kind of see we've got some long-term support around here. So keep that in mind. Glaxo could continue to fall through. So you don't want to try to pick bottoms yet, because you don't know if the stock's going to bounce or not. Most likely it's going to keep going down. That's my assessment. Adobe has been kind of a bummer. NVIDIA, here's NVIDIA. I mean, everybody loves NVIDIA. Keeps going up. Here's that congestion pattern right here, and it blasted to the upside. So these patterns do work. They do repeat themselves over and over time. Supermicro, that was up and down, MicroStrategy continuing to go up. So that's about it. Let me bring up this website that I told you, a free website that you can use. It's called chartpatterns.com. Okay, chartpatterns.com, free website. It'll give you all the patterns that repeat themselves over and over on the stock charts. If you click on that little symbol, it'll bring you to another page that'll go more in depth of what the chart, the pattern will give you. Okay, so here's you can see the channels just like I drew. So use this as a website to kind of get you into that beginning, if you're in beginning stages of technical analysis. All right, that's all for the lesson today. Once again, we make these free videos. We all want to help out the trading community. We all want to be better traders. Give me a thumbs up. Give me a like if this has been helpful to you. Don't forget to subscribe to this channel. That helps me. Send me an email. I'll always answer your emails. I'm going to put another video on the screen here about put selling, what it is, another free video. So stick around and watch that if you want. All right. So that's all from me today. I'll see everyone in the next video. This is Lowell signing off.